Alright, so let me just give you some typical calculation, give me some number so you understand why sometimes it's a better idea to file separately, even though file separately lose a lot of benefits. For example, one of the thing is medical bill. Okay, according to the IRS publication 502, that's the 2024 version. As I'm recording this video, that's the latest version now. Of course, I'm going to constantly updating all this series. So, yeah, do check while you're watching this. Do check the latest information. Okay, so for example, on reimbursed medical and dental expenses are deductible, but here's a catch. There's a concept called AGI. Okay, that's the adjusted gross income. Okay, you get the adjusted gross income. Okay, basically that's the come on, this is just adjusted gross income. That's the income that comes to your pocket, but you multiply that by 7.5%. Okay, that's the quick calculation, and that's the threshold that I've been talking about. So sometimes you exceed that threshold, sometimes it does not exceed that threshold. Okay, and if just to think about this is like zero. Okay, this is like a threshold. The threshold is calculated by using the AGI multiplied by 7.5%. Okay, only when you exceed the 7.5% of AGI threshold, what is exceeded, that is deductible. Okay, so it's kind of a it's like a catch 22 scenario, right? So you have to exceed that in order to qualify for the deduction. Okay, so exceed deduction, yeah, catch 22. All right, so yeah, basically you need to reach that certain threshold. That's the threshold we're talking about, and that is the deductible. So deductible, right? So that amount is deductible. Okay, and why this threshold make a difference when you file separately or file jointly? Okay, so as I said in the previous series of videos, that if one of the spouse got a medical bill, okay, and if they file jointly, they got combined income. Okay, combine everything, to be honest, together, and if they file jointly, you got a combined income which is higher, right? That means you got a combined income which is higher, and then you multiply 7.5%, and then that will definitely get a higher amount you find jointly. Okay? If you just one of the spouse got a medical expense or medical bill, that you want to use that, you utilize to claim this, right? And make it deductible, right? You have to reaching a higher threshold because you combined everything here inside the AGI. Okay? Let me just give you some numerical example, so yeah, it'll make sense. So say one of the spouse, yeah, this calculation I'm going to erase it because I'm going to do this numerical example here. So for example, one of the spouse got an AGI. Just consider this as adjusted income, right? So for example, you got I don't know, $30,000 US, right? $30,000 US. Okay, and then in that specific year, you got unreimbursed medical expenses of say medical bill. Come on, it's a lot. So say $10,000 US. Okay, that's the medical expense. So I'm going to use the same math. Okay, that equals to this. Okay, that's a lot. Think about this. Just the AGI is the $30,000 US, and they got a $10,000 US of a medical expense, right? And on the circumstances of their itemized. Okay, so itemized, that's we are going to use this proportion 7.5%. Okay, so that will give you approximately 2,250 US. Okay, so if you want to sort of calculate the deductible, that means you're going to get the medical bill is the $10,000 US, and that is the threshold that we're talking about. Remember, I talk about this is the threshold, and what is exceeding that become deductible, right? The threshold is relatively low, right? We got 2,250, okay, US, and we just calculate that. We got 7 and 750. Yeah, US dollars. Okay, so basically that's just a fight like as a single person, right? Just a one of spouse, just one spouse. Sorry, one spouse. Okay, one spouse scenario. Okay, but remember, if you decide to find jointly, you need to combine things together. So it will affect the AGI. Okay, the AGI will not be just the one spouse AGI, but rather two spouse AGI. You're going to combine it, and that you can't change it. Okay, you can't change it because it's one of another spouse. Okay, so for example, as I said, for example, one spouse got like a relatively lower income, so AGI is 30,000 US dollars. That's a relatively low. For example, the husband or the wife is rich, right? Got an AGI of say the other spouse's AGI of 100,000 US dollars. Okay, that's AGI 2, right? This is AGI 1. Okay, if you decide to find jointly, that will be two AGI combined together. So basically, you're going to combine the AGI total. I'm going to use a little bit T here, right? So AGI total will be 130,000 US dollars. Okay, but since the base changed, you multiply that by the 70.5%. Okay, that will give you a really high threshold. It becomes a little bit hard for you to reach that threshold. Okay, so if you multiply that, it will give us the 9,750 US dollars. Okay, that is the relative. If you compare this threshold to the threshold here, okay, that's a lot. So what exceeding this threshold is just a tiny little bit. Okay, previously this is the deductible. Right now this is the deductible, right? So basically you're eating away your deductible by combining this. And of course, you can't consider just one of the combination, right? This is just for this specific medical bill. Okay, for example, this medical bill take a huge part of your everyday expenses, like really huge expense for your expense. You want to compare it with the bill, you like rank it. This is like a huge, and it will eat away all the benefits. Okay, you decide to find jointly. Of course, you got tons of benefits. You have to weight all this benefit as well as the loss. Okay, and if you eat a lot away, that's not a good thing. Okay, so remember, we got this 10,000 US dollars, right? That's the medical bill, right? And we are going to calculate what exceeded. So 9,750, and then you got just merely 250 deductible. Okay, so if we compare this 250 deductible to this huge amount of deductible here, sorry, it's 7,750. Okay, that's a lot of difference, right? That's huge difference. So, assuming all other conditions are the same, under these circumstances, it makes sense to find that separately. Okay, but if the other condition is not the same, okay, so for example, you get all the benefit that you can claim, then you have to consider the difference. Okay, which one's the benefit for you? And of course, there are also other difference. For example, if you go through like a divorce, you don't trust your spouse, or if they're like things is messy, you have to hire someone to do that. That will cost money. So you have to consider the pros and cons and give you the final answer. Okay.